Narendra Modi's rise to power in 2014, India started a more active foreign policy focusing on the geo-economic purposes of the country. India's proactive engagements with several countries, including the key nations of China, United States, Russia, Japan and others, are based on how India seeks to promote its own economic well-being and stability. In the first 3 years of office, Prime Minister Narendra Modi has reportedly visited 49 different countries. It is argued by supporters that Modi's foreign visits have earned India tremendous goodwill, especially in the 2017 financial year. FDI into India had reached a $62 billion, despite a global FDI inflow slowdown. Critics point out that Modi's foreign policy objectives on the economic front are not entirely bearing fruit. For instance, China had pledged to invest $100 billion, but Chinese Premier Xi Jinping has met that promise with only a $20 billion commitment, which too hasn't materialized till date. China, on the other hand, has already pumped in $46 billion in the China-Pakistan economic corridor. In this episode of India Risk Report, we look into the foreign policy dynamics of India and how it impacts the economic growth model of the country, and where it is we stand among the Committee of Nations in upgrading our investment climate and future model of development.
Hello and welcome to another episode of India Risk Report. And in this episode, we are looking at India's foreign policy implications on the Indian economy if India continues to take advantage of all the initiatives that are being put into place by Mr. Modi's government, which had taken on a much more active foreign policy stance, because the foreign investments that come into the Indian economy obviously could energize various sectors of the Indian economy, particularly the manufacturing sector, and also India's ability to export whatever India has if the relations between India and its foreign friends continues to go stronger and stronger. And to look at these issues, we have two very well informed experts with us on the panel today. We have Ambassador Gurjeet Singh. Welcome, sir. Ambassador has been as a Foreign Service officer, represented India in a variety of countries, but his last and very important appointment was Ambassador of India to Germany. And we have Dr. S.P. Sharma, who's the Chief Economist of the PhD Chamber of Commerce. Ambassador, sir, I want to basically ask the first question, which is that while the OECD has said that there could be a reversal of sentiment in the world generally in terms of foreign investment, India has still been targeting foreign investments, and I'm told we are looking at a figure of $60 billion or more. But at the same time, India is falling in the confidence index that all agencies like A.T. Kearney and others spell out for the world. So how are we, is it our expectations a mismatch to what we are able to deliver on the ground?
Well, I think it's a matrix of expectations that we need to look at. One is our own expectation of what we believe where India ought to go. And there I believe the foreign policy and our domestic economic policy are fairly well in sync. The second one is how do we treat the ratings that we get from others, and that is where I think both domestic institutions and foreign policy institutions need to work harder to correct their perceptions and bring them in line with ours. And finally, there is whether the world has got enough cake to go around. I believe it doesn't matter whether the world has enough cake. Our policy should be good enough to get you a larger slice of the cake than the world thinks you ought to get. And that is where success truly lies.
So, Dr. Sharma, that's the big picture. But the reality on the ground is the FDI flow is crucial to prop up the manufacturing sector in India, which I am told has of late not been doing too well. And also that the government's goal to make 25% of the country's GDP be linked to the manufacturing sector by 2025 currently is not nearing that. We are at about 18% of the GDP being linked to the manufacturing sector. So what steps need to be taken to speed that up?
Firstly, India's participation in the global economy is increasing. That is the result of our intact foreign policy or foreign trade policy. I would say our participation was at around 1.8% in the global GDP. Now we are more than 2.7% in the global GDP. That is the reflection of a good policy environment during the last many years. Our reforms started in 1991, and I would say that our real income was doubling in the so many years. It took around 40 years to double the real income in India, starting from 1951 to 1941. Now the real income doubles in the 17 or 18 years. That is the reflection of a good policy environment at the center level. And the second, why the manufacturing sector is not able to attract so many investments? That is the question, that why we are not able to attract manufacturing or increase the manufacturing share in the GDP. Because India's growth story is totally different from the textbook model. Because our labor force, our labor directly jumped from the agriculture sector to the services sector. The reason was that manufacturing sector is full of the stringent laws. So now the reforms like Make in India program of the government is very lucrative, that is attracting the investments. Now the investment, FDI investments are more than $60 billion for the last financial year. That is I believe that is the largest FDI attracted by an economy in the Asian region in a particular year.
But it's little short of what we got the year before, that was 62 billion.
Yes, that is, I would say there are fluctuations because of so many reasons. Sometimes the rupee appreciates or depreciates. So that's why we cannot say that this fluctuation $1 or $2 billion is a major impact for the Indian economy. But in totality, the FDI is consistent over the years. And in terms of exports, now check the exports. Exports were only $14–15 billion in 1991 and $187 billion at around 2007. Now we are more than $300 billion. Though there are a lot of problems in the export segment also, but still we are growing in a good trajectory. I believe that is the reflection of a good policy environment, and moreover we are able to diversify our export market from the advanced economies to the developing and emerging economies. Now our 50% exports are towards the emerging and developing economies. That is the reflection of our better thought process to tilt our export markets from the advanced economies, lackluster demand in the advanced economies, towards the emerging demand in the emerging and developing economies.
Well, Ambassador, I suppose you share the same sentiment, because I saw that you were nodding, but I want to take a question straight into your foreign policy domain. That in terms of global outreach, how do you view our successes as against our ability to deliver, particularly in terms of have we been able to actually capitalize as a return on investment to what we have been promising to the world?
Well, first, our investment in foreign policy is actually very little. So if you were to calculate, let us say, the entire FDI and posit it against what you spend on foreign policy, I think you have a very good rate of investment.
Yeah, but every country would then just notch up their positives based on what they spend on the foreign service as against what they get in. But my concern is that, are we able to deliver on our promises, or are we stretching our hat too far?
I think the question is again both domestic and foreign. So if I remember Mr. Modi coming to the Hanover Fair in 2015 and presenting Made in India at that time, it was a game-changing moment.
Yeah.
3 years on, the Germans still remember that the dynamism has come back to India because of that one event which altered perceptions tremendously. You're right in asking, now what? So has, for instance, the German investment into India picked up with the promise of 2015? Not to its full potential, but you do have them trying out new things, startups, electric vehicles, and we ran a very successful program called the Make in India Mittelstand, targeting small companies, which brings you about €1 billion of investment a year. Not big, but the things are changing. The question then is that, have we been able to turn the international perception in our favor? And there I think the answer is an unequivocal yes. But is that perception linked to reality on the ground? And this is where the doubt comes in, because you can have a public diplomacy event which is linked to you saying what you think India is. But unless this reality link and reality check is clear, somewhere down the line you lose. And I think there, Germans and many others are waiting, when will you improve your ease of doing business? And when will things on the ground really get better to meet this perception promise? And I think that is where the doubt comes in. There is an alternative scenario. We also reach out to have project exports, let us say to Africa, to ASEAN, to our neighborhood. This is the Sabka Saath, Sabka Vikas syndrome spreading to the region, that our prosperity is common prosperity, which makes economic sense. But even there, questions now arise that the promises we make, are we able to deliver them in time?
Okay. Dr. Sharma, quickly, where are we falling short?
I think a few revolutionary problems at the domestic front are economically not in sync, because the demonetization impacted our export scenario very largely. That is one thing that we are emerging right now from that shock. Now the exports are again reviving in the recent months. So at the foreign level, at the international level, I think our foreign policy environment is totally intact, and we are very good in the global charts, and we have improved a lot during the last 3-4 years in each and every segment of the global economy, starting from the ease of doing business, logistic performance index, global innovation index. We have improved a lot from 144 level in the ease of doing business to 100 level. That is the biggest achievement of any economy in the global ecosystem. So at the global front, we are looking lucrative at the global charts, but at the domestic front, there are few concerns with respect to our external markets.
So we'll talk about the domestic front after the break, where we will look at how India can brace itself and strengthen itself against the tailwinds of certain trends that are dominating global economic climate. But that after a break. Welcome back. We continue to have our two experts with us, and we're looking at the implications of India's foreign policy achievements on the Indian economy, both positively and the pressures that the economy faces to deliver to global expectations. Ambassador, sir, the Indian economy, as Dr. Sharma has brought out, has been doing well thanks to the efforts of you and your colleagues from the Foreign Service, because you have been turning everyone's attention towards India. What were your selling points about India in the global markets that you operated in, and you still operate? I'm told you're quite sort of active in the Middle East, in Africa, ASEAN, elsewhere. What is your selling point?
I think the biggest selling point has always been the market size of India and our demographic dividend, and the rising middle class. And this has happened in 1991. The biggest asset was this, not really our liberalization, but the access to our market. But if you look back in the 60s, the Indian supply missions that Indian embassies in London and Washington ran, they basically ran because we had a market in which other countries were interested. So our market size and access to it remains the dominant theme of interest. But can we get people to look at our market size but give us technology and investment alongside? So not only sell but also produce, and that is why we have Make in India or Digital India and then Skill India. At the same time, we have to see that what we have to share, can we take it out? Now Europe gets about as much investment from India as we get from them. Now is this a good thing? I think it is. But it gives you a share in wider markets, it gives you better access to technologies, and gives you therefore a better role to make your own economic society a more egalitarian and one which will give your own people a better life.
Dr. Sharma, you were talking about how the economy has performed to global expectations. Ambassador talks about that Europe gets as much investment from us as we get from Europe. But some figures I have here tell a slightly different story. India's trade deficit almost doubled in 2017 and 18 from the previous fiscal year of the country's import bill, and also that remittances to India, while having picked up a bit, were still short of the remittances when we were at its peak sometime in 2014, about $70 billion. So, and equally, we offer the market size of our economy. but do we offer professionalism and our ability to live up to promises?
Yes, our policy environment at the domestic level is also not bad. We are good in our policy environment also, but we have few revolutionary reforms which are for the longer term period of time, which impacted the shorter term economic scenario, like firstly the demonetization. That impacted our export scenario, because majorly our exports are labor dependent exports, and these markets like the gems and jewelry, textiles, garments, these are very fragmented markets and running on the cash only. So due to demonetization, lot of exporters lost their export orders in the foreign markets. So now they are not able to rejuvenate their export orders. That is the impact, that we are not able to increase our export segment. That's why the trade deficit, as you mentioned, is increasing. That demand is intact at the domestic level. We are importing in the same content, but we are not able to export that much to reduce our trade deficit. That is the reason that why the trade deficit is increasing. That is the impact of demonetization, that still we are not able to capture the global demand, which is still intact. Now the global growth is projected at 3.9% for the current year and 3.9% for the next year also. That is the highest growth rate after the Lehman crisis we are achieving once again. So to capture this demand, we have to become very, very competitive in the global market, which we are not able to do because of firstly demonetization, and second the teething problems of the GST, because the exporters are not getting their refunds adequately. Their working capital is blocked. They are not able to do business properly. So that's why the small exporters, which contribute at around 40% in the total exports, are not able to perform well in the global market. That is the reason that why we are not able to perform well at the international level, and our trade deficit is increasing.
Okay, I'll come back to that a bit later. Ambassador, sir.
About your trade deficit, I would say rising FDI is actually going to increase your trade deficit, because the more that people invest in manufacturing and more technology comes in, actually you import more machines and stuff like that, which actually increases your trade deficit. So I am not worried so much about the trade deficit. I am more focused on investment promotion and getting that right, because once you get that right, your trade can always go up at any time.
You actually led me on to the question that I was going to ask you, sir, that China, for example, has pledged $100 billion, but the commitment was only finally made for $20 billion, and that too hasn't materialized. So there is something between a promise, something between a commitment, and finally in terms of what goes on the ground. And it is said that in Mr. Modi's tenure, the one big deal that has been finalized is the Rafale aircraft deal of $12 billion. All others are promises in the air. Is this criticism fair?
Well, I think we are forgetting the UAE promise of 70 billion into our infrastructure.
Yes, but we haven't been able to provide a single project proposal to UAE for even $1 billion, and they are waiting ki do to hum de.
So that is the problem. We are able to, as a foreign policy, or let's say external policy, because it is a group of ministries and people who actually reach out to foreign countries. But when we have got all those doors open, our own windows get shut. That somehow is the contradiction in our system.
That's what I wanted you to elaborate on.
So when you talk about, let us say, defense, or you talk about manufacturing, or you talk about a big, let us say, steel company wanting to come from one of our great partners, why do they all run into trouble? Because somewhere down the line, our own system is not in sync with national perception, or the perception an ambassador is asked to convey. So an ambassador can create you a big balloon, but the balloon has to have a tether. Without a tether, it's merely a balloon. And that is where this tether is sometimes pretty narrow.
Sharma Saab, probably the last question. Elaborate further on between promises and ability to deliver on what the ambassador talked about. And the other is, why are the medium and small scale enterprises not given the kind of push by the government? Is it because the bureaucracy only wants to feel happy about big signature projects?
Okay. Firstly, addressing your second question, the MSME sector, because we are representing the MSME sector, 70% members are from the MSME sector. MSME sector is now actually improving, but the sector was full of problems during the last few years. Majorly the problem is from the financial side. Banks are very reluctant to do for the credit disbursement to the MSME sector. That is a bigger concern for the MSME sectors. That's why they are not able to perform well in the businesses and in the export markets also. And second problem is the infrastructural support for the MSME sector, ease of doing business, because government is doing a lot at the macro level and we have improved lot at the global charts, but the reforms at the ground level actually for the MSME sector, ease of doing business for the MSME sector, removal of the inspector Raj totally from the system, it still has to be delivered at the ground level. That is the big concern of the small scale industry, but government has undertaken a lot of reforms for the sector, like the Mudra scheme for the micro enterprises is very good. That has created a lot of employment opportunities in the economy. And for the MSME sector, there are the change in definition and the reforms at the ground level, like few reforms, that the labor laws. Now the government has allowed the contract labor, fixed term labor in each and every segment. That is a good thing, that will help the MSME sector to create employment opportunities. But still the things are not that much 100% foolproof for the MSME sector. First and foremost is the availability of credit from the banking sector. Why the banking sector is reluctant to deliver the credit offtake to the MSME sector, that is the biggest concern because of the so many reasons. That may be because of the NPA problem. And your second question, that the promises and progress at the macroeconomic level, we have improved. We have improved in the inflation numbers, we have improved in the GDP ratio, we have improved in the FDI, we have improved in the global charts. But the most adequate reforms, which is a need of the hour, is to create the employment opportunities in the economy. That is still missing. That will happen with the more and more focus on the micro level, at the ground level, at the district level, at the village level.
Okay, so a lot of issues have been covered by both our experts, and ranging from the promises made abroad and the ability or inability to deliver at home. There are limitations. Macro level reforms have taken place, but at micro level and at the ground level, this haven't filtered down. Some of the legacies of the past, like the license Raj, continues to haunt us. But I think most importantly, India needs to get the industry involved with the national perspective, and that, if done quickly, can get us up to speed to the expectations of the international community. With that, I would like to thank you both for your wisdom, and thanks for being with us on the show. We'll be back next week with another episode. Until then, goodbye.